If you've been on the internet recently, you've likely been bombarded by a variety of scathing political takes in typical fear-mongering fashion. Now make no mistake, what we're witnessing through conflict in the Middle East is disgusting and it's abhorrent. But this channel is not about controversial geopolitical events. What we're here to talk about is the potential ramifications for public financial markets. And that's exactly where the fear-mongering comes in. I've seen people saying that the US is about to enter war, that we're going to reconstitute the draft, that the world is destabilizing and inflation is going to run rampant. Yet the never-ending list of potential issues could run until the end of time. The fact of the matter is, we see events like this occur all the time. You just look at the events that we've seen from 2009 to 2021. Flash crashes, the Arab Spring, nuclear scares, elections, diseases. Every year there are multiple potential global crises that we see emerge that people claim will be the downfall of the United States. How it's going to bring the next global collapse of the stock market and possibly even our financial systems in general. Yet the markets have largely gone up over this time period, as you can see from this chart. So quite frankly, I think it's moronic to trade in and out of the stock market based off of these macroeconomic narratives. Now, there are a variety of reasons that we can attribute to the strength of the US stock market, but the point remains. People get far too worked up about events that ultimately blow over or lead to nothing tangible. It's pretty easy to give into your emotions in times like these. It seems like we're on the brink of global conflict as the world is becoming increasingly polarized. Unfettered access to information through the internet also has its downsides. We can witness atrocities happening in real time, essentially as much as we like. You can see that fear-mongering is starting to take a toll in general, and not just from the events in the Middle East, but ongoing narratives about economic hardships as interest rates continue to rise and companies begin to feel the burden. We're seeing wide-scale layoffs, especially in the tech sector, which has affected me as well. My whole office is being shut down and my job is being cut, so I'm well aware of what's going on right now. We can see sentiment indicators like the CNN Fear and Greed Index has been teetering around fear and extreme fear. Yet again, the markets are panicking and stock prices are being decimated in many sectors. It seems like human psychology never changes and the results remain the same. The investors who ignore the hysteria of other investors and focus on the long-term results that they're trying to achieve, those are the people that tend to succeed in the end. The average holding time of a stock is decreasing rapidly. Stocks listed on the New York Stock Exchange are only being held for around 5 months on average. Just look at how far levels of patience have fallen from the 1960s, only around 60 years ago. You can see just how short-term focused we've become as investors, and that has led to lackluster returns. This is a large contributing factor to the returns that an average investor will receive, which is approximately 4% annualized. With Treasury bonds yielding around 5% now, there's no reason to even bother investing in individual stocks if you're going to get these types of returns. So something needs to change here. If consistently timing geopolitical and macroeconomic events were possible, then the richest people in the world would be economists, who've dedicated their entire lives to that very concept. But that isn't the case, is it? We can look at the undisputed best investor of all time, Warren Buffett, and hear from him about how the last thing you should do is try to time investments. As most people know, he's consistently talked about buying quality companies and hanging on for the ride throughout whatever larger events may occur. Long-term investing is what has worked for most people. There are plenty of billionaires that have been successful through long-term asset accumulation, but how many billionaires are there that focus on trading in and out of positions all the time? A lot of the traders we've heard of, Jesse Livermore, George Soros, Paul Tudor Jones, these guys aren't day traders. They were just making large outsized bets in shorter time periods. But they weren't reading charts and looking at resistance lines, okay? They made names for themselves with patience, ignoring plenty of opportunities that they could have bid on, while they focused and concentrated on a few specific situations that they knew well. Given the average investor's returns, most people cannot successfully pull this off themselves. There's a pretty clear correlation between how often you trade and what your returns might look like, and it's not good. And the statistics back this up, especially when looking at such short-term focused people like day traders, where only around 1 to 3% of them can manage to achieve above-market returns on a consistent basis. The most active ones tend to lose the most money as well. If you're psychologically wired to do well in such high octane strategies, then I'm not going to say that it's impossible, but the odds are heavily stacked against you. Clearly, from all the stats I've shown so far, what most people tend to do does not work. Focusing on the short term, the hot new trends, growth over all cost, these ideas are not providing great results, especially now that interest rates are rising and the global economy is continuing to worsen. The financial markets have woken up and we aren't in Wonderland anymore, so you can just forget that. If you want to perform better than the average investor, you're going to need to behave differently than the average investor. Focusing on the short term, focusing on the hated, when a stock or sector is hated for unjustified reasons, focusing on the unpopular, the obscure. This is where you're going to gain an advantage, especially when considering what I covered in my last video when I talked about if people want to actually consistently beat the markets, they might want to consider not fixating on large caps. With all this said, if many of these horrible predictions come true, if the people saying that we might see regional war, that the dollar and the global financial systems are going to collapse, if that's going to happen, then it's likely we'll have far larger problems in our own lives than what's happening in the stock market. If the gold bugs get their way, then all the money you have in stocks would be worthless anyway. So I genuinely don't think there's ever been a point in worrying about these things. Oftentimes all the people trading just end up hurting themselves as they scare themselves out of the markets for long periods of time. You miss out on a lot of opportunities that way. For most investors, I think it's better to just hold on, and if a decent crash does occur, it's time to keep averaging down into companies that'll survive over time. And that's how fortunes are made. Thanks for watching.